Yes, this is exactly what you've been searching for. The double impulse strategy, which can double your deposit in just one trading session. That's precisely what I demonstrate in this video. There are a few key details, so pay close attention and follow along with me. Master these and your trading will skyrocket. Let's get started. First off, what exactly do we need to look for on the charts for this strategy? We're searching exclusively for impulsive, sharp movements, after which there's consolidation, and then a second impulse. Draw the Fibonacci levels based on the first impulse, and at the 1.6 level, we expect a pullback to the middle of the consolidation. But why the 1.6 level specifically, and not any other? I've covered the answer to this question, along with a detailed analysis of Fibonacci retracements in this video. If you still have questions after that, drop them in the comments below. I'll do my best to answer them all. Let's hop into our platform's graphical tools and open the Fibonacci levels. How do we correctly draw these levels? Place the value 0 at the beginning of the first impulse and the value 1 at the end of the first impulse. We also take the wicks into account. Now we see levels that can act as support and resistance, meaning the price might stall or reverse at these points. But for this strategy, we're not interested in the other levels. The key focus is on the range between 1.6 and 1.7. As I mentioned in the Fibonacci video, the 1.7 level is the maximum point for the start of a correction. If this level is broken, double check that you've drawn the levels correctly, or I recommend skipping this setup. After the first impulse comes consolidation. This is crucial. The price needs to tread water for a while within a certain range. Once consolidation wraps up, a second impulse follows, and this is where you need to be on your toes. As soon as the price reaches the 1.6 or 1.7 level, we expect a pullback. As I mentioned in the Fibonacci video, the 1.7 level is the maximum point for the start of a correction. Otherwise, we open a trade in the opposite direction of these impulses. The movement potential for this strategy is the middle of the consolidation. I typically choose an expiration time averaging 3 to 5 candles if it's a 3-minute or longer time frame. On 1-minute charts, 7 to 9 candles. You can use this strategy in any market phase, be it a global uptrend, a global downtrend, or a sideways market. It works like a charm across the board. Just a quick reminder about my Telegram channel. Even though most of my followers copy my trades automatically, I still post a breakdown of each trade for those who copy manually or are learning from my signals. So, go ahead and scan the QR code on the screen to join us. Oh, and by the way, for new traders, I've got some great news. Use the promo code MARK100 to get 100% to your first deposit with this pre-holiday offer. Besides the 1.6 level, there are other confirmations that signal a reversal is on the horizon. First, large wicks on the second impulse. They indicate that the price is already being pushed down from higher positions. For example, candlestick patterns like the hammer and shooting star at the end of an impulse are excellent reversal signals. Second, the RSI indicator will definitely show you that the price is in an overbought or oversold state at the end of the impulse. But here's the kicker. Why can't you rely solely on the indicator's readings? I'll demonstrate this clearly with my own trade. Let's break it down thoroughly and step by step. The first thing we notice here is the absence of a pronounced trend movement. The price has been moving sideways between these minimum and maximum values. In this section of the chart, the first retracement went down to the minimum flat value. It hit the support level and bounced back slightly. Then came the second impulse, which broke through the level. Here, we've already drawn the Fibonacci levels based on the first impulse, and we see that the price retracement started a bit below the 1.7 level. So what's up with the indicator? It's showing oversold conditions. That's true, but an indicator isn't a magic bullet if you use it without a strategy. It showed oversold here, but the price didn't reverse its movement. Now I'm going to shed some light on indicators as a whole. If we take the indicator readings and overlay them on the chart, see, they almost line up. That's because the indicator takes information directly from the chart, tweaks it slightly by running it through a formula, and spits out new values. In this sideways movement, it's crystal clear. You can spot overbought and oversold conditions even without the indicator. While we were discussing the indicator details, the strategy performed flawlessly, and the trade closed in profit. To reinforce what we've learned, let's check out another trade using the double impulse strategy. There's no global trend, just sideways movement again. Let's rewind a bit and build the Fibonacci levels together. Notice, I didn't take this wick into account because that candle was a reaction to news. At that moment, the price was bouncing all over the place, which is why that wick formed. Just an hour ago on this chart, the double impulse played out in this section. There was a local downtrend, but the price didn't go lower. Maybe the Fibonacci level halted it, maybe something else. As this area was tested twice, a reversal pattern, the double bottom formed, and an uptrend kicked off with impulsive movement. At the base of the pattern, consolidation formed at this resistance level. Notice how perfectly the Fibonacci levels stop each candle in this consolidation, and how the 0.7 level aligns with the base level of the pattern. And the movement potential of the pattern almost perfectly matches the 1.7 level. And of course, the indicator shows overbought conditions. We stick to the strategy, open a trade in the opposite direction of the impulse, and patiently wait. I want to add, folks, don't blindly follow indicators. Assess the situation comprehensively. Trend, levels, patterns, they're all pieces of the puzzle, and the more you piece together, the sweeter your trade will close. And if this video was helpful to you, hit that like button, subscribe, and share it with your friends. Stay safe and be in touch.